Hello everyone. So this is a pre-market analysis of 20th of July, and we have to look at three important global macro situations. So the first one, see the major developed results of Reliance Industries, HDFC Bank, and ICICI Bank, and the results are looking positive. But at the same time, we have to also look at the US-Iran conflict, which is escalating, and US market scenarios that we need to look at. So let's start with the results. I'll quickly go through that. So if you look at Reliance Industries, see, when it comes to Reliance Industries, Reliance, HDFC, IC, what we need to discuss, and these three together contribute 28 to 30% in Nifty. So 1/3 of Nifty is what these three is all about, right? So if you look at Reliance Industries, and it's around 3.12 lakh crore, and EBITDA margin is improved by 100 basis point, and EBITDA increased around 11% also. Now, if you look at profit after the tax, it is again increased by 23,200 crore, and the profit which is attributable to the Reliance shareholder, which is again increased to 23.4%, that's around 21,000 crore. So beat estimates by around 70%, which is positive. Net profit also beat estimate by around 30%, which is again very good positive. So if you look at the segments, then I can go further deep into that, but let's ignore that. But things I see, the strong areas, oil to chemicals, oil and gas, these are strong areas. Geo platforms are relatively stable. The Reliance retail, where the profit have declined around 21%, that's, it closed around 2.6%, which is again very good, right? So that's again similar to Friday's move that we got in the Indian market, and there is no fresh arbitrage indication over there. But overall, the interest income is increased by 1.4%, which is positive. Non-interest income declined around 3%. That's not that good. That's mixed, I would say. And operating expenses declined around 1.6. That is actually positive. That is why the profitability have actually reduced. And compared to the analyst estimate, the estimates or the expectation, the net interest income is actually missing the estimate. This is actually mixed, and Reliance and ICICI is very positive. So net profit also missed the estimates in HDFC. So HDFC may come slightly under pressure. Asset quality, gross NPA, net NPA also marginal. So I would say mixed to slightly negative when it comes to HDFC. Reliance is strongly positive. Now ICICI Bank net interest income is around 6% increase by 8%, and compared to the analyst estimate, net interest income beat the estimate by around 3%, very positive. Net profit also beat the estimate around 9-10%. That's again very good positive. And asset quality, if you look at it, 0.38, which is very good. Net NPA increased marginally, slightly negative, but overall, if you see, that's very positive. So if you look at Reliance and ICICI, very positive. And HDFC, I would say mixed, contributing to 30%. So considering the results are good, I think market should be positive if you are looking at this result. But other side, we have some geopolitical risk, that is like US-Iran issue, strikes on Saturday, Sunday, Friday, and Iran also responded with similar attacks on Kuwait, Bahrain, Jordan, where American establishments are there. And if you look at it, attack on US base in Jordan, found killed, and one reported missing. Even one US military personnel got killed, means you can understand and you can imagine what kind of retaliation they will go for. Their nationalist interest is so high, right? And another drone detonation of a downed Iranian drone. So total, you can see 3 confirmed US military personnel killed during the weekend itself. So things are getting escalated. Oil price also. Now, if you see Brent around 82, last day we discussed 79, then it spiked to 82, 88 on Friday. But now if you see, Brent is around from 88, again spiked to 91, and WTI oil prices spiking, which is not good. And now if you look at the US futures are trading negative, because of this weekend escalation. GIFT Nifty also trading negative. It's around below 300. It's around 24,290, which is trading now. If you wait around 20 point premium, it may open around 24,270, 260. So if it is opening around 260, 270, means it's around 70 point gap down. 60, 70 point gap down is what we can expect at this point of time. Mixed HDFC Bank earnings. So these three, since it's contributing around 30%, it can look good. But at the same time, big negative is the crude prices, and it have an impact on current account deficit. It will have an impact on rupee also. And US, what we have seen a couple of months back, the same scenarios coming back, or even aggressive and much worst may come, looking at the way the counter attack is also going on because of the earnings. But globally, it's weak. If you look at institutional activity, FIIs sold for around 400 crore, DIIs bought for around 1,000 crore. Now, surprisingly, last day, if you see call open interest has declined, as understood, it's 40% because of the huge rally. So PCR, previously it was around 0.95, now it is 1.36, which is very bullish. Okay, so things are looking by considering the weekend escalation. So how that is going to affect our market, that we need to wait and watch for today. Now, if you look at the participant positioning, the retailers are around 8.3% bullish, prop traders 3.3% bullish, and apart from that, some earnings that you need to watch out for today, right? And technically, 24,200 is going to be the support level. So it's around 24,270 is where it is going to open. So immediate support is 24,200 and resistance. And if 360 is comfortably closed, that's when you'll be seeing that 24,500 mark. But chances are very less. Considering the domestic scenarios, earnings and everything, it looks positive. But considering the global will allow us to move further, and also oil price, which is spiking, definitely not good for our market. So these are the main points that I want to discuss. The maximum call open interest now is at 24,500, and to 24,000 could be the larger range. And today we need to wait and watch whether it is going to break 24,200 on the downside. Then it have a potential to go and visit 24,000 once again. That's been the support for quite some time. Or if 24,360 is broken on the upside, you'll see a move to 24,500 also. So that's about the pre-market analysis. Now, guys, if you would like to learn this in the live market, where we have the live market training and mentoring session, you can talk to our team and you can join the session.